Looks like we got a good group of people coming in. Got some people as well attending the live stream. We'll get started here in just a couple minutes, everyone. We're glad to have you here. We're going to talk about a lot of interesting things today. And I'm also joined by Hope Samansky as well. Nice to have you here, Hope.
Nice to be here. Thanks for being on, Nick.
Absolutely. I've been looking forward to, I always look forward to the webinars. And today, we've got a whole new set of slides. So if you guys have attended the previous webinars, this will be some new, fresh content on some topics you guys have requested us to talk about, either through, what we're constantly listening to you guys, whether it's through intercom, you guys are telling us, things that you're maybe confused about within the app, or maybe things you want to learn about. Or things you want to participate in. So we're going to be talking about a lot of interesting things, especially for those of you out there who are just getting started, managing your financial future, getting into cryptocurrencies. We're going to break it all down and hopefully answer a lot of good questions and provide some value at the same time.
Mhm. All right, guys, it is 6 o'clock Eastern Time. Welcome, everybody. So glad you all are here on Zoom and on YouTube Live. We have Nicholas Merton here, founder and CEO of Digifox, and also founder and CEO of DataDash, the largest cryptocurrency YouTube channel out there, with us to kind of talk a little bit more about some New Year's resolutions, getting investing in crypto, as well as some tips for how to invest in yourself in the new year. Nick, so great to have you on.
Hope, thanks for having me. It's always a pleasure to join you. And thanks as well for everyone for tuning in either on the live stream or watching it later on the channel. We're going to have a lot of exciting things to talk about today, as Hope mentioned earlier. So really excited to be here, Hope.
Awesome. Some quick things before we start. If you are on Zoom, the bottom middle of your screen, there should be a Q&A box. We'll have a Q&A at the end of the presentation. So put your questions in there and we'll do our best to get to all of them in a timely manner. Do that live Q&A at the end. That's always kind of my favorite part. It's like hear from you guys and go back and forth. If you guys are on YouTube, you can put your questions in the chat. But it'd be probably best. We still have some room on the Zoom if you want to jump on there instead and put your questions in the Q&A box there. It'll be a lot easier for us to get to the questions. But you can try to put them in the YouTube chat box too. We'll try to get to all of them. If you have a customer support chat, you can feel free to get a hold of us at digifox.finance. The bottom right-hand corner, there's a chat box there. You can get in touch with our team. Or via in the app in the profile tab and contact support. Do know that our support is a little swamped right now, so it might take a little bit of time to get back to you, but we will try to get back to you as soon as possible. But with all that said, I will let Nick get started and we'll get going.
Awesome. Thank you very much, Hope. I appreciate it. So I just want to start off by saying welcome, guys. We're really happy to have you here today. In this video, I'm going to be talking a little bit about a few different categories of things that you guys have emphasized are important to you. Things like preparing for your financial future as a whole, how to get started with cryptocurrencies. I know for many people out there, and including myself when I got started, it was a bit overwhelming. And along with that, focusing on how you can make preparing for your financial future, preparing to get into the cryptocurrency space, not only as simple as possible and coming in strategic and smart about it, but also making it really fun and enjoyable and quite exciting as well. So we're going to be talking about all this. Let's go ahead and dive straight into it all, guys. So taking a look here at the first three things we want to talk about today in this webinar, we're going to be focusing first on preparing for your financial future. So being able to begin building a savings account in this case for yourself, and along with that, broadly preparing for your financial future. A lot of people see a lot of confusion when it comes to finance, and they don't really know where to get started. And the second thing here as well is building a $500 cryptocurrency portfolio. So we don't want to build something too small or too large. We want to focus here on building something that's right for you. And it doesn't have to be exactly $500. I think it's just a good benchmark to get an idea of kind of getting your feet wet, trying out the cryptocurrency market and getting your hands on digital currencies. And last but not least, we're going to be focusing in on our Invest in Yourself Holiday Challenge, where we're giving up to possibly over $20,000 for those of you who are just simply saving for the future. So we'll dive into this a little bit as we go throughout the presentation. Let's go ahead and start on the first portion here. Best practices for saving for your future and preparing for your overall financial future and goals. So this is a very broad topic overall. And when it comes to personal finance, a lot of people get overwhelmed because they really just don't know where to start. I think I kind of, when I first got into finance, thought it was very overwhelming. I thought like, what is the stock market? What are, in the case of cryptocurrencies, when I learned about them later on, what is crypto? What are markets? How do they function?
Yeah.
A lot of financial terminology can be a bit overwhelming. And, Hope and I bounce back and forth. I think that a lot of the companies and the technologies out there, as much as it's gotten better over the years, it's still very overwhelming for people to get started. So
yes, exactly.
Yeah, so we'll go ahead here. I just want to mention one thing. Anything you guys hear throughout the presentation here is not directly financial advice. It's just meant to serve as kind of a guide or a starting point to really begin embarking on that journey. Though I do think we're going to be able to provide a lot of value here today. Again, just want to make it clear, if you guys are really working with a large sum of money or money that really matters to you, if you're open to it, consider meeting with a financial advisor, etc., or following some other different voices and opinions out there. So let's go ahead and talk about the 3 layers to financial security. So this is a little kind of, not only kind of a roadmap here, but along that as well, a bit of a kind of game plan and structure about how you can go from practically having no financial savings, no financial preparation for the future, towards becoming an individual who's well-versed in finance and really actually has a good amount of savings and protection and what people call basically financial freedom. It's a very kind of, it's kind of a broad metaphorical term in this case, but overall, financial freedom is the ability to not have to worry about money, to have some sense of security with your finances, to be prepared for the future when things go wrong, or even if you're doing well, to go out and do the things that you want to do in life. So let's go ahead and talk about 3 of these key principles. First up here is layer one, getting things in order. So before we can even think about what we want to do in the future, think about all the grandiose things we might want to do or things we might want to have. First off, we got to do two critical things, which in regards to this topic of getting things in order. First, we have to review our expenses. So if you're in a state where you don't feel like your finances are sound, in this case, meaning that you're cash positive, maybe you're in debt in this case, maybe you, for example, are finding that, every single month your take home pay is basically getting deducted between taxes, between general expenses that you have on a recurring basis, and also maybe your personal spending habits that can vary month to month, that you're not taking home much. This is one of the first places you can start to be smarter with your finances, figuring out what you can cost, what kind of brands or service providers you can opt into that will help save you money in the long run. And this is something, again, we could dive really deep into it, but there's a lot of strategies online that can help you guide into further details on how to cut your expenses. The first thing that I want to share here is really cutting down on non-essentials, especially when you're kind of deep in the trenches, when you're dealing with debt or other expenses that seem overwhelming. It's best to be as disciplined as possible, cut those expenditures, and make sure that your income is above your expenses. Second off here, the question is, got debt? And if you do, pay it down as quickly as possible. Now, this can vary depending on who you are as an individual. Debt really kind of goes two ways. If you're in a low income scenario and your debt is starting to consume you, especially considering the interest payments. So if you're behind on your payments, you're having to pay interest on top of that credit that you borrowed. In that case, you want to pay that down as soon as possible because that is serving as a massive liability on your personal balance sheet, on your financials. So because of that, we want to focus on paying down the debt. But at the same time, if you're someone who's relatively well off, you have a steady, clean income in this case, you're maybe, for example, maybe in a middle class kind of range of income, or maybe well off, in that matter, you don't have to worry too much about debt. In fact, debt can actually be a great tool in some cases to build up your credit and then be able to take out larger loans for larger expenses in the future. But use debt wisely. Understand the benefits and negatives of credit. And we've actually written some articles on how to mitigate debt for Digifox before. Second thing here is layer two of preparing for financial security, and that is actually building wealth. Now that you've paid down higher interest rate debts, you've focused on removing expenditures, now you can move on to focusing on how do you actually create wealth. So the first thing here that's important to understand is that if you want to build wealth, we have to start here with the basics, and that's building an emergency fund. So as we talked about with reviewing our expenditures and taking down debt, we want to get above water here. Right? A lot of Americans or people across the globe, we've got people who are tuning in from all over the world, find themselves in a position where, again, they're just trying to get to the surface, get back on track with the basics. And this is that portion of time where we're basically building a fortress here. We're protecting ourselves. We're building an emergency fund in case we have medical expenditures, if we get in an accident, if some kind of unseen hidden expenditure comes up in the future, we want to basically have a certain amount of money prepared. Now, it will vary in this case depending on your income level and your expenses, but generally speaking, you want to be able to cover for about 3 to 6 months in your emergency fund for like living. So if you couldn't work, for example, this is kind of the worst case scenario, or you had to stay home and take care of a family member, so you had to leave your job or maybe got fired, right? Having 3 to 6 months of expenditures covered in the sense of your savings is what you want to shoot for. It depends on where you're coming from the world, but we like to say the ballpark range of 2,500 to 5,000 is a good amount. Now, if you're coming from the States or areas where, for example, maybe things like insurance might be really expensive or things that you can't control, it might be a little bit higher. So there's no problem with boosting up that number, but this is at least a good starting point. And I always recommend, one thing that I've always done is focused on trying to build on my emergency fund as I grow the rest of my net worth later down the line. So second off here as well is building an investment portfolio. For an investment portfolio, this kind of ranges to any asset you can think of. Investing in the stock market, investing into properties, investing into cryptocurrencies or precious metals like gold and silver or government bonds, whatever it may be. Building up a portfolio here where you can put cash to the markets that you believe in, that you understand and care about and actually think will yield you a return. And this is where a lot of research is going to have to come in. You're going to have to do a lot of due diligence. You're going to have to listen to different people in the industry, from longstanding investors, people like Warren Buffett, to a lot of kind of maybe new age investors, people like myself on YouTube who cover cryptocurrencies, people who focus on gold and silver. Follow the people who understand the types of investments that you're interested in and learn from them. If you're still still at the beginning stages. And one other important thing I wanted to mention as well, whether it's your investment portfolio or your emergency fund, I would recommend, in this case, again, it's not direct financial advice, but one thing I like to do personally is set aside a certain portion of my income, a minimum portion of my income that I know is going to go directly to my investment portfolio. Because once I know my expenses and I know my debt obligations and I know my income, then I can know in this case, okay, maybe 20% of my income should go towards my investments and my emergency fund. Or maybe if you want to get more specific about it, maybe 20% go to my investments, 5% goes to my emergency fund. I'm continuously building up that fortress. I'm getting to a state where my money is working for me. And this leads to step number 5 under layer 3, and that is looking ahead. And this is the best part of it all, because after all that hard work, you can now start to actually look forward to your future and think to yourself, what are my goals? Like, what do I care about? Do I want to raise a family one day? Do I want to travel to this one country I've always admired? Do I want to be a nomad and travel the world? What's the expenditures of that? Do I want to go to college? Do I want to go start my own business? There's so many things in life that eventually or inevitably are going to require money to some degree. And this is why we don't believe money is really a bad thing. It allows us to do some really impactful things at the end of the day. So it's a matter of understanding how money works and how we can make our money work for us at the end of the day. So this is a very clean-cut game plan that can help a lot of you out there towards focusing on building that financial security. And I want to talk a little bit here as well about the old way of finance being a bit impractical. You'll probably hear from how I kind of talk throughout this presentation, guys, that we need to have a creative, engaged way of looking at finance, because the old way of finance that worked for the last century, or more predominantly the last few decades, is not working like it used to. So for example, a lot of people in traditional finance will tell you, and I know, for example, when I went to school and stuff, I was told about these same exact things. And I went to a decent school overall. And they basically mentioned, oh, you should put your money into traditional savings accounts. Put it into CDs or certificates of deposit, where you lock up your money at a bank and get a slightly higher interest rate for a given period of time. All of these things, including bonds, will not protect your wealth in the long run. And this isn't just my opinion telling you this. It is statistically proven that it's not going to preserve your purchasing power as an individual. And the reason for this is because of a clear reality. When you put in $1,000 into a savings account, a year later, not only are you not going to be able to earn much interest at all on it, the average national savings rate in the US is 0.06% right now. So 6/100ths of a percentage point. Used to be about 7 to 8% back in the 1980s. But along with this as well, we have to consider the fact here that the base monetary supply, the currency in circulation, is increasing through inflation. The estimates officially given out are about 1 to 2% each year. So officially speaking, you're already losing out and you're losing your purchasing power. But along with this as well, the official inflation numbers by many degrees are sometimes way off from the actual real impacts of inflation that can sometimes go into the upper single digit areas, depending on how you measure it, if you consider all the cost of living, such as rent and housing. So all of these things combined really make all of these 3 investment vehicles, just putting money aside, putting money into a CD or bonds, not a viable solution in the long term. You will lose your wealth over the coming decades. Second here is insurance costs have gotten out of control. This is something that we generally can't really control much. A lot of us, whether we have to or not, depending on government policies or where we're based, require insurance. Right? Well, usually most of us want insurance. We want to protect ourselves. And it doesn't matter if it's car insurance or health insurance, especially health insurance is out of control. So we need to think to ourselves about how we're actually going to be able to combat this. And third here is buying large assets or liabilities can provide a lot of centralized risk to your well-being in the long term and your financial future. If you, for example, really love properties and you put all your money into properties, or vice versa, if you put it all into even crypto as well, that's going to pose a lot of risk to you. And also, if you go out and buy a big fancy boat, or you buy a major house, in this case, that may be more than you really want or need, that can leave you towards a lot of risk. So how can we go about doing this smarter? Well, it's about adapting and approaching to finance in a modern way. So for all 3 of the points we brought up, here are 3 solutions. Third here is exploring alternative assets. So instead of just having your money locked up in a CD or a government bond that might yield you something, if not in some countries, a negative yield. In this case, you can have some of your money in Bitcoin or other cryptocurrencies. You can have it in other investments like stocks, gold, silver. And another thing as well that people don't always generally see when they talk about investments or assets is education. This doesn't mean you have to go down the route of college. College might be valuable for the field you want to study in. There's all types of alternative ways to invest in education. You can do alternative education paths. You can go to trade schools. And another one that gets written off a lot is investing your time properly, investing it in educating yourself in different types of fields. Everything I know about finance has been self-taught over the last few years. It's a great example. And I was able to, basically found Digifox in this case. And we have a great team and a great product, and most of all, a great community, all because we basically went through that path of learning about finance. The same journey that many of you guys are on right now. Second off here as well is considering health share programs or other similar healthcare savings opportunities. So something that a lot of people don't know about is that there's actually a slight alternative to insurance, but ironically enough, it's actually very close to the traditional insurance model, where everyone puts money into the pot, you withdraw it when you need it, you file a claim in this case. And that's what's known as health share programs. So it's not meant for everyone. I'm definitely no healthcare advisor, but I know many people who have actually saved a lot of money considering health share programs. And they do count in a lot of ways as insurance in many countries and jurisdictions. So it can be a great way to cut down that every month expenditure while still protecting yourself for the vast majority of things. And sometimes you just have to make certain commitments, like you don't engage in certain day-to-day habits like drinking, or you exercise, etc. And the third one here is considering sharing or owning cooperative assets and liabilities. So whether you're talking about a liability, something that depreciates over time in value, or an asset, maybe like a home or some other type of thing that is generally meant to appreciate, you can do cooperatives in this case between other participants. So let's say you've got both you and your friend have always imagined owning a boat, something that I think a lot of people, if they get to that point in their life where they can afford it, would definitely love to have a luxury like that. It's definitely a luxury. Well, it's not as difficult to reach those things as you may think. If you do cooperative ownership, let's say you and I go out and buy a boat right now, we split the charge between the both of us, the financing. We've now just cut the cost effectively in half. And the thing you think about with like a boat or maybe a vacation home or, kind of resort that you'd stay at, the important thing to note is that you're probably not using it 95 to 98% of the time in your life. So why not share it with someone, build terms that work out, and both of you can live that dream with the same exact asset or liability. Now, we've talked a lot about personal finance here, and I think that this probably provided a good overview for a lot of you out there. But I know many of you out there as well are curious to learn about cryptocurrencies as well. You're going to learn about what it's like to get into the cryptocurrency space, what you should keep in mind as you go into this really unique, interesting, and volatile space, and how you can come out on top, hopefully making a return in the long run. So we're going to be talking about the whole process here within a couple minutes as to how you can build a $500 cryptocurrency portfolio. And it'll be surprisingly simple, I think, for many people out there. Again, this is not financial advice. I recommend you guys do your own research, and along with that as well, consider talking to a financial advisor if you're putting in a substantial amount of money. So let's go ahead here and talk about simplifying crypto investing. It doesn't have to be complex. There are 5 critical things you should keep in mind here. The first one here is always, number 1, keeping security in mind. With cryptocurrencies, when it comes to transactions, when it comes to placing your money somewhere, it is immutable, meaning that you have placed a specific transaction that is either going to stay in that spot until you, in this case, withdraw that crypto if you have the ability to, if it's in one of your wallets, or basically anytime you're interacting with crypto, transactions are set in stone, right? So imagine bank transfers that can't be turned back, right? Unless the sender, in this case, the receiver sends it back to you, right? This is an important thing about crypto. So always keeping security in mind is key. You don't want anyone to get access to your funds. Second off here is proper diversification. So making sure that you're not having all your eggs in one basket, putting it into a diverse range of different cryptocurrencies. Along with that as well, on the point of the diversity, considering small, mid, and large cap valuation plays. Now, we'll talk a little bit about what this means, but it's basically talking about different valued cryptocurrencies based on their market size. So, for example, maybe there's a lot of small technology companies out there, but a large cap stock out there on the market would be something like Apple or Microsoft, a very large and established company. But there's also a lot of great small and mid-sized startups or companies that might be considered something you might want to invest in. 4, knowing what not to do. It's one thing to know what to do in the market, as we're kind of talking about here, as probably a good guide to get started on what to do. It's good to know what not to do as well. And growing your portfolio long term. What's the general goal here? Like, what's our focus long term? So let's go ahead and talk about these. So keeping the security in mind, the first question we have to ask is, where are we going to purchase and store our cryptocurrencies? Now, again, we're a bit biased here at Digifox. Obviously, we've created a way to buy cryptocurrencies and store them, but it may not be the choice for you. If you're absolutely focused on no risk whatsoever, you might want to consider going out and doing a hardware wallet. If you're like really, really paranoid about any type of third party or any company in this case. But for Digifox, we actually pride ourselves on security. We're basically at our core in this case, the Digifox wallet within the Digifox app is a self-custodial wallet that utilizes your phone and email, which is basically known as two-factor authentication. It's meant to be only controlled by you. We don't have access to your phone. We don't have access to your email. And for those of you who know about public-private key encryption in relation to cryptocurrencies, think about a private key being like the password to your funds. It's encrypted locally on your device. We never see your private keys. So Digifox is similar to most crypto wallets in the sense that you are your own bank. You manage your own funds. There is no third party like Digifox managing your crypto. That is unless you go out and to maybe, for example, lend your assets to Celsius. And we'll talk a bit about that later on. But in this case, that's the first thing to think about. Do you want to store it in a software wallet like Digifox? Do you want to put it in a hardware wallet like Ledger or Trezor? Do you want to, for example, keep it on exchanges? Do you think that actually having a custodian or someone holding your funds, maybe like Celsius, is the safe place to be? It really depends on what you want as an individual. And of course, do some due diligence and research on the security ramifications of each of these. Second off, what added security measures can you take to protect your funds long term? So this varies depending on the type of wallet that you have. For Digifox in this case, you overall would like to maybe probably set not only a good PIN code that's unique that you don't use for other things, but also use Face ID and biometrics like Touch ID so that only you can get access to your wallet in this case, even if someone were to get access to your phone. And second off, along with this as well, it's important to consider that for hardware wallets, you want to keep your seed phrase or recovery phrase in very safe locations. With Digifox, you don't have to worry about this, but with a hardware wallet, that's something you're going to want to do very good in this case. Make sure that you have that in a place where it can't, for example, be lost. It can't be susceptible to fire, to water damage, anything like that, because those 12 to 24 words that recover your crypto wallet could be the life or death of you in this case, basically meaning you lose everything if you lose those 12 to 24 words, which is again why we don't use seed phrases with Digifox. We've used your phone and your email in this case to be able to generate a unique smart contract wallet that allows you to also recover those funds as well. And the third thing here, not investing more than you're willing to lose. So again, I think this is something that a lot of people tend to say about crypto, and as generic as it might sound, it's true. Making sure that if the worst thing were to happen, if you were to lose all of your crypto in this case, just like how you could lose a pile of cash or your gold, right? Again, making sure that it's not going to cut into that safety fund that we talked about. You remember the emergency fund or your entire portfolio that you've worked hard to build. And it's why we emphasize in this case, for example, I'm a bit guilty of it. I have a lot invested in crypto and stuff. But that's I'm different in that case because I'm very invested in the space. I've done research. I work in the industry. I would say for the average person, it's probably not best to go all into cryptocurrencies or even maybe a 50 to 75% allocation. That's pretty far out the ballpark for most everyday people. So again, just making sure you know the risk of interacting with crypto, especially being such an early space. Second point here is proper diversification. So I say that, and this is coming from me personally, that I usually will never just own one or two cryptos. My goal is to own a minimum of 3 cryptos or more at any given time. And 3, again, is on the kind of like low end in this case. You usually want to explore 4, 5, 6, 7 to 8 different cryptocurrencies, but you also don't want to spread yourself too thin. In that case, sometimes you mitigate potential returns by owning a lot of laggers on the market that aren't really key performers. The second thing here as well, for proper diversification is holding cryptos that serve different purposes and utilities. So you don't want to place all your bets on one crypto. There's a lot of people who are quote unquote maximalists for Ethereum or Bitcoin or some other form of cryptocurrency where they're kind of all in on a crypto. And that's not only not smart, as we'll talk about later, but also it's just good to have different value propositions in your portfolio. You probably wouldn't want to only own technology companies at the end of the day, or companies that are focused on, For example, I'm just trying to think of an industry that's maybe gone out over the last few years, like oil companies in this case. Oil companies can have very volatile swings depending on oil prices. So you wouldn't want to just focus on, people who are drilling and refining oil. And the third thing here is knowing why you're holding each asset in your investment strategy. So understanding why you have each investment in your portfolio, not just because someone told you to go buy something, but why you like these cryptocurrencies, why you like these assets, and also what's your strategy for actually, eventually maybe taking profit or, kind of in this case, approaching the market overall. What's your thesis for why you think that your portfolio is going to perform well? Consider small, mid, and large cap valuation plays. So as we talked about earlier, the term cap is referring to a broader finance term known as market capitalization. Sounds like a really fancy term, like a lot of things in finance, but really what it is it's the total value of a given asset class. So for example, Bitcoin, as of recent with its rally that it's had, yeah, the price of each individual Bitcoin is around, say, $34,000 at the time of recording, but that's just one Bitcoin. In total, there's millions of Bitcoin in circulation, which gives us our market capitalization of, I think, somewhere around $650 billion. Gold, for example, has a market cap of $13 to $14 trillion. And when we're talking about global equities or stocks, in this case, we're talking about $100 trillion or more in valuation. So you can start to see here how crypto is a very small market. As expensive as Bitcoin seems at its price, it's a small drop in the bucket compared to everything else. And there are a lot of cryptocurrencies that are even smaller than Bitcoin that are only a couple $billion in their market cap or a couple million. So we're going to go ahead and talk about what a large, mid, and small cap cryptocurrencies are. So the first point here is to have at least 33% in large cap plays. So at a minimum, have 33% of your cryptocurrency positions being in the established players. And these are cryptocurrencies under on our general valuation that we're using here today that are over $10 billion in market capitalization. If you go to websites like coinmarketcap.com, you can find the market capitalization of each cryptocurrency that you look at. It's one of the major metrics that everyone looks for. And these would be plays like Bitcoin or Ethereum or Litecoin, right? The great thing is that you can buy a lot of large cap plays like Bitcoin and Ethereum through Digifox. So if you're looking to get access to those, they're available there. Along with that as well, the second point here is to have around 33% in the mid cap plays. Now notice the language change here as well. We'll get back to that in a moment about having around 33%. But overall, mid caps are plays that are below 10 billion, downward towards $1 billion market capitalization. So that $1 to $10 billion range for overall valuation of a given crypto, and having about a third of your portfolio in that. And last but not least, this is a critical one here, having no more than 33% in small cap plays. Now, again, we went from having at least a minimum to have around 33% to have no more than 33% in small cap plays. The reason for this is that we want to make sure if we're building our kind of initial cryptocurrency portfolio and you guys want proper risk mitigation, but also potential to possibly win out big in the long term through your investments, this is a very healthy balance here where we prioritize maintaining safe first, but at the same time opening ourselves up to still have some exposure to cryptocurrencies that are very high risk and high reward. So in the case of small caps, these are cryptocurrencies below $1 billion in market capitalization. So they'd be maybe a couple $10 million, a couple $100 million. These are the kind of cryptos that would fit in the umbrella of small cap cryptocurrencies. So generally speaking, outside of a percentage, we're talking about a full portfolio allocation here. And we'll talk about an example portfolio and what that might look like with some real plays that fit into these categories. Fourth is knowing what not to do. Now, I've had some videos on my personal YouTube channel for a long time talking about these principles, these very critical principles. And it's crazy. I did a lot of them back in 2017, and they're still true today in the cryptocurrency market. First off, do not day trade. I will definitely say this is one thing. It's actually probably against our business model at Digifox because we provide exchange services where we do generate fees on trades. But quite frankly, we're not here to tell you guys to go out and day trade. It is a very likely scenario that if you're focusing on the long term, in this case, most people would do better off investing for the long term or trading, if they do, on longer term timeframes than trying to trade, basically buying a position and selling within the same day. That's what day trading is. For the vast majority of markets in the world, over 90 to 95% of people lose day trading. And the second critical thing to keep in mind is even if you can make money day trading, I bet you could probably do it in crypto markets. If you try hard enough, if you do your research, the important thing to keep in mind, though, is that even if you learn how to day trade, you make a profit. Considering all the time, the stress that you're putting in to making these returns, you may not even outpace what you would have gotten just simply holding long term. And you usually have to pay a higher tax obligation for day trading. So again, keep that in mind. Second, don't go all in on one cryptocurrency. Guys, I can tell you one thing's for sure. Cryptocurrencies, as much as they are an exciting industry, are going to have a lot of failing cryptos in the end. There's going to be a lot of projects that roll over, they keel over and die, and they never come back. And this is the same with stocks. It's the same with a lot of different markets out there. Again, keep in mind that diversity is key. Not going into one crypto is much, much smarter, right? Going into a broad, diverse portfolio, as we talked about. And third, ignoring hype and fear and not letting your emotions get the best of you. This point is probably just as relevant out of the other two to average everyday people in crypto. Whether it's reading the headlines, whether it's following, different types of personalities out there in the market on Twitter or on YouTube, one of the things that I always emphasize is don't buy into the hype and fear of the market. Don't get caught up on, the day-to-day moves in price in an asset. So long as you come in with a strategy, all you have to do is stick to that strategy and keep that perspective on a longer term time frame. The more you focus on the long term, your goals begin to be focusing on what's going to happen in a couple of months to a year versus what's happening over the last few minutes to the last few hours. You'll realize that it's a lot less stressful than it has to be. And those 10 to 20% moves in the market up or down are really not going to scare you as much because you know your game plan. You know you're sticking to it. That's the critical thing. So again, I definitely want to emphasize all three of those points that we talked about. And the last portion here, before we actually take a look at an example portfolio and just how simple it can be to build this strategy, we're going to take a look at growing your portfolio long term. So it's likely that you're going to start off with a specific amount when you're building your crypto portfolio, but it doesn't have to stop there. So for example, you can consider depositing your assets on platforms where it puts those assets to work, similar to how you put savings in a bank account, or in this case in Digifox, you can put your savings or your crypto assets into a provider like Celsius, where you can earn high rates of interest on things like your stable coins. You can earn 10%, but even your crypto assets, I think right now you can earn over 4, maybe 4.5% on your Bitcoin. The rates do vary a bit, but basically you're able to earn some interest while you're idly holding your assets, which is really exciting and doesn't take much extra work at all. You just have to make the deposit there. The second thing as well is dollar cost averaging into your favorite positions. So dollar cost averaging, again, another fancy term, is basically what it says. You're taking dollars, or basically money that you've saved up over time, and averaging into your favorite cryptocurrency. So you'll buy a little bit here, you'll buy some a few days later, or maybe a week or a month later. Depending on how frequent you have cash that you don't need to spend right now, it's a question of where do you allocate it? Where do I put it, in this case, in my crypto portfolio, in order for it to grow? And the third point here is consider making crypto a larger allocation in your portfolio. So maybe as you get more comfortable with crypto, maybe you might want to move money from your savings, from your investment account, from traditional equities or bonds, or maybe, for example, you sell your property, run up on some cash. Maybe consider in this case that crypto might be a market you want to boost your portfolio allocation of. Some people are all in on crypto. Some people have 1% allocations of crypto. It really depends what your type of risk level is. And along with that, if you feel crypto is worthy of being a part of that portfolio. I can't sit here and tell you how much you want to have allocated to crypto. It usually is good, though, to not be all in on anything. And that goes for traditional equities or property and different types of investments. All righty. So the exciting part here is we're going to be focusing a little bit on an example portfolio. Now, I want to make it very clear, guys, I put this example portfolio here together, but this isn't something that you have to go out and buy right now or anything like that. And in fact, I would recommend you not do that and go do your own research and due diligence on any of the projects mentioned. But what I built here is an example portfolio of some cryptos that I like and would meet within the guidelines that we talked about earlier. So first off here, before we even take a look at the portfolio, I want to go ahead and talk about one of the critical things that you should develop first, which is your strategy. And I built the strategy here in 3 simple bullet points. So first off, we're focusing on a broad range of cryptocurrencies, which focus on providing the utilities of store value. In this case, that would be Bitcoin, right? Bitcoin providing this kind of alternative gold or digital gold that a lot of people are looking for. Assets within the decentralized finance space. So for those of you who know about DeFi or attended our DeFi or decentralized finance webinars, you would know there are protocols like Ethereum that service the DeFi space, specific DeFi protocols like Uniswap or Ampleforth or Loopring that provide decentralized trading services or decentralized stability. And along with that as well, oracles that provide data feeds to blockchains, such as Chainlink, right? So again, some of this might sound like a bit of technical mumbo jumbo. At the end of the day, once you do your research and you get more familiar with the space, you'll start to understand what some of these terms are, what these utilities are, and why they're valuable. But overall, you can see that I spent some time to think about what plays do I really think provide value in the long term, which have places in this space, and which ones would be good for me to invest in long term. Which ones do I like, right? And second off, if we have extra cash to add, we'll add to our strongest performers in the market. And we're going to be adding on them when they're down 30%. So this kind of sounds counterintuitive, like investing in your strongest players when they're down. Well, what does that mean? It basically means that we're going to assess, and this is, again, not something you have to do. It's just what I like to do. A lot of people have this misconception, want to buy things that are underperforming or really, really low. And that's not always the case, because sometimes they're low for a reason. And that means that either the fundamentals are bad, the market may not be interested in those cryptocurrencies, and therefore they can go off to die and we'll never see them reach the all-time highs again, right? So what I like to do is focus on the players that are leading the market, that people are excited and buying up. And along with that, getting them when they're at discounts. So just like how you want to buy something you really enjoy, maybe like a designer brand of clothing at a discount, 30, 40, 50% off, I want to buy my favorite cryptos that I think are going to continue to perform in the market and do well at a discount. And in this case, I've set a minimum of 30% as an example. You might have a lower risk tolerance and say, no, I need it to go down 40, 50% before I want to add more money in. Might be the case. You can usually analyze through technical analysis and other means how far a crypto tends to pull back on its corrections, or when you have these general multi-day or multi-week pullbacks in price, how far they generally go. And that can help you out a bit. The third aspect here is building an exit strategy. And overall, we focused here on closing our positions when we see Bitcoin, which is the leader in the market. In this case, it's the largest crypto, getting towards the range we think it's going to top out in this cycle. So that's when we're planning to take profits. We estimate that this is going to happen, at least in my estimation here, that it's going to be in 2022. And I think that it's going to be around a range when Bitcoin is above 100K. Meaning that that's when I think that the market might be topping out, and we're going to be setting up for a bear market or a downturn in cryptocurrency valuations, so we can be able to start locking in our profits and protecting ourselves. And as I wrote here, basically we're taking 10 to 20% of our positions out each week after we get above 100K, right? That's my thesis here for this example portfolio. So I've built my strategy here. I have my game plan on why I'm investing in what I'm investing in, how I'm going to add more money into it overall, and when I'm going to take profit. And on the left-hand side, I've got the other important equation, which is what assets am I going to own? And this is the fun part here. This is where you make it about you as an individual. You don't just follow what I say. You don't follow what the big investors say, you know, what their allocations are. You go out there and you build something for yourself. And this is the beautiful part about crypto. So I've followed within our guidelines that we talked about earlier, and I've built a portfolio where 20% is Bitcoin, 20% is Ethereum. So this is actually overextending a bit here and saying, as we opened up earlier, the idea that you want more than 33% in the large caps. So providing a good set of protection here between these two assets. And along with that as well, focusing on adding in some of the mid caps here. So plays like Chainlink or Uniswap that are below $10 billion in valuation. That makes up another 30% of our portfolio. And last but not least, the small caps here, plays that are below $1 billion in total market capitalization, such as Ampleforth or Loopring. Now, these are all, in my opinion, really exciting plays, and that's why I've got them in my portfolio. But I didn't focus too much on any specific valuation category. I stuck within the lines here. 30%, which is actually, again, a little bit below that 33% maximum that we talked about. And along with that as well, around close to 33%, in this case, 30% mid caps. So the large caps took a little bit extra in this case. But it keeps things simple. And the great thing is you've got your portfolio built, you're focused on the long term, you know your game plan. Now it's all about just thinking about how can I go back, again, as we talked about with our financial planning for your financial future. How do I cut my expenses, right? Once I've got that emergency fund, once I've done all those things, and how do I start to put some cash towards building up my portfolio while cryptocurrencies are still early in the cycle? That's the thought process we should have. So anyways, I hope that in that case that helped, guys. And again, just to kind of demonstrate here, this is kind of an example of how you can use price action analysis, especially on longer term timeframes, to help you with building those long-term strategies. So as you guys might have recalled in the presentation, I showcased that I would be taking profits starting when Bitcoin is over $100,000. And we think that it's going to be sometime in November 2022. So this chart here demonstrates the long-term price action of Bitcoin starting back here in the summer of 2010 when the first markets emerged for Bitcoin. And we're looking at what's known as a logarithmic chart. It basically squeezes the gains here into a very kind of understandable pattern here when Bitcoin really made most of its major moves on a percentage basis. We can see here that over time, it builds into these beautiful kind of logarithmic curves where there's the line of resistance and the line of support. And we also find out something very interesting as well, that this can not only help us gauge where the price may peak out in the next cycle, but along with that as well, how long the cycles tend to take. And what we found is that from bottom to top here for Bitcoin cycles, it tends to expand by about 11 to 13 months each time around. So the first one here was 11 months. As you can see, the 11 bars, each of these represent a month's worth of price action. You can see the dates down here at the bottom. Then we have one that was 24 months, adding 13 from the original value. And in this case, 11 additional months on the next cycle, up to 35. So we're estimating between 11 to 13 months, keeping it even at 12 months against the previous one. That would take us to November of 2022 for a total of 47 months from when we bottomed back in December of 2018. So it's a very critical thing to keep in mind. If we're expecting we're going to be above 100K, we still got 70, roughly in this case, about $70,000 to go. And that's when we're expecting that we would take profit on our strategy. This is a great way where I'm not doing technical analysis every day. I'm not day trading. I'm just looking at what the long-term cycles are telling me. It's a very, very streamlined, easy way to approach investing. And it makes the whole process a breeze. So you can go focus on doing the things that you want to do in your day-to-day life and not being consumed by your investments. If your investments are consuming your day-to-day life, well, in that case, you're doing a lot more work than you need to do. Money is supposed to work for you when you're investing properly. So last thing I want to talk about here is the Invest in Yourself challenge. It's one thing to plan for your future and start saving, right? In this case, you can, again, have that rainy day fund in Digifox. You can buy your cryptocurrencies in Digifox, but it wouldn't be that much unique comparative to other applications out there if not only we provided such a great product overall, but along with that, we do a lot of fun things to make investing and saving overall a lot more enjoyable and exciting. And one of those examples are the Invest in Yourself challenge. So what is the Invest in Yourself challenge? Simply put here, the Invest in Yourself challenge is simply focused on trying to get people to focus on putting away money for their future, whether that's savings in dollar terms, like you'd have in a savings account, or holding an investment portfolio like crypto and earning interest on it. And that's the key goal here, is to focus on encouraging more people. And what better way to do that than to give you all an opportunity to win big in doing so? So the great thing is you're already earning interest on your assets. And along with that, you're saving for the future. You're preserving wealth. But one of the great things here is that we're going to be giving away to 10 lucky winners a prize reward within the group of people in the Digifox community who are saving. We started off with over $2,500, already our biggest reward yet from our previous Invest in Yourself challenges. But this time around, we did something different. We didn't want to leave the stakes at just $2,500 in total prize rewards. No, we wanted to boost it up if we could get enough community participation in this effort of investing in ourselves as a community as a whole. And we basically made it where if we got to a certain number of threshold in the sense of entries to the competition, in this case, we boosted up to $5,000, $10,000. And there's a chance that before the challenge ends at the end of this month, we can have over $20,000 in rewards. It's currently at this mark here at $10,000. So we're really, really excited about it. And this is something we call a dynamic challenge. Previously, we had stagnant challenges that had stagnant prize pools and didn't really encourage us getting other people involved. But this is the really cool thing about a dynamic challenge, is that it gets other people involved in saving for their future. There's no loss in this case. It's something that's focused on all of us growing together as a whole and building better interest on our savings and preserving our wealth long term. So we're very, very excited about it. We'd love to see the participation from all of you out there across the world. And I know a lot of you out there maybe are curious to participate in this. So the first thing that you're going to want to do is understand the rules here. So the first thing about the Invest in Yourself challenge is that you have to deposit at least $100 into your Digifox Celsius account. We support all cryptocurrencies, and it's basically going to be available to get entries in this case or be eligible if you deposit between December 14th of 2020 to January 30th of 2021. Now, just to explain for those of you who may not know, Digifox Celsius account, your Digifox Celsius account, is a specific type of account in the Digifox wallet through our partner Celsius that allows you to earn interest on your crypto. You have to go through what's known as KYC. It's basically know your customer or identity verification. And once you're approved on there, you can make deposits. Do want to let you all know we have had some users right now who haven't heard back from their applications. We're working with the team right now to make sure we can get that streamlined so you get those even quicker. And we'll hopefully get you all up and running on that as soon as possible. The second thing here as well is that for each $100 you deposit into your account, you actually earn an additional entry. So if you deposit $1,000, you get 10 entries into the challenge. If you just do $100, you're going to get 1 entry into the challenge. And in this case, there's no limit. You can get as many entries depending on each $100 interval that you deposit. Second off here as well, in regards to considering how much entries you're going to get for deposits, if you make deposits before January 15th of 2021, we're actually going to give you 2 entries for your deposits, which is really, really nice. So again, consider here trying to make that deposit, getting registered before January 15th, in that case for Celsius. Fourth year, earn an additional entry by liking and retweeting our official announcement post. So again, we're all about just getting more people focused on saving. It's one of the best things you can do. So why not go out there if you can, like and retweet our major pin posts on Twitter here for the challenge, the major announcement tweet. And I think even if you want, hope maybe you can link it in the chat so people can go out and do that. And the last thing you have to do after that is message us in our customer support, which is found under the profile tab of the application. It's on the far right side, and you can click on customer support. Just message us there with a photo of your like and retweet, and we'll give you an additional entry in that case. Very easy way to boost your chances. Fifth here is to earn up to 10 additional entries by completing achievements on Digifox. So we have a lot of people who are new users here. We've had a lot of growth as of recent. And one thing that we always recommend for them to do is to participate in achievements, which are found within the community tab, the central icon at the bottom dashboard. And what these achievements are they're great ways to basically get started with Digifox as an application, to make your first deposit, to make your first swap, to earn your first rate of interest, and to basically do all these basic things within Digifox that will prime you to understand natively how to use the application. It's already pretty streamlined, but it's a good way to gamify it. And one way that it really pays forward is that each achievement that you complete gives you an additional entry for life for every challenge. So what does this mean? Well, if you're eligible, if you meet the basic minimum requirement here, so in the case of the Invest in Yourself challenge, it's $100 in your Digifox Celsius account. In this case, you'll be able to get, if you complete all the achievements, up to 10 additional entries, giving yourself 11 entries in total just from depositing $100 and completing all those achievements. So it's not that bad. It's a great place to get started. And last but not least, each entry earns you an entry in the prize drawing. So the more entries you have, the higher your chances are. Now, this does not mean that the highest kind of entries is going to guarantee you win. We didn't want it to be that way because in that case, it wouldn't be fair for people who might only have 5 or 10 entries or might be depositing only $100 to $500. That's really not fair in the long run. So we wanted to make it where it's open to everyone. And again, we've had it actually in our last challenge. We were really surprised when we really had a lot of, that was like our first major one comparative to our first one that we did back in the summer, back in September. And it actually worked really well. We had a lot of people who had just maybe like a dozen entries in this case who actually did quite well. So again, keep in mind that there's going to be a wide range of different participants who are going to win out in these challenges. And there's a good fair chance for anyone to win. So quick rundown here of the prize rewards. They started out at $1,000 for first place, $500 for second, $250 for third place, $125 for both fourth and fifth respectively, and $100 for sixth, seventh, eighth, ninth, and 10th. But we've not only been able to take first place up to all the way to 4,000 in this case, as well as a basically 4x on all of these, but we have a potential to get all the way up to $8,000, $4,000, $2,000, $1,000, $800 for these prize rewards if we get up to the $20,000 prize pool. So we're very, very excited. We're getting close to it. If you guys want to play a role in it and stuff, you can definitely consider participating. Last thing I wanted to run through real quick are just some quick things you can do to boost your chances. Bitcoin deposits are now supported, so you can deposit any Bitcoin that you already own, or go out and purchase your first Bitcoin by clicking the add button within the Digifox app to connect your bank or debit card. Deposit any other eligible cryptocurrencies that Celsius supports through Digifox, where in this case, you can boost your entries. So if you have $100 of Ethereum sitting on an exchange, you can put it in Celsius. I know Hope as well had some Ethereum, I think, on her Coinbase account. She was like, you know what, I
Mhm.
might as well earn some interest on it. So
Yeah, I did.
yeah,
I
yeah. So
moved all my Bitcoin over too once we supported that.
yeah, exactly. It's something where it's like, if you got it sitting idly on an exchange, like a centralized
Yeah.
platform similar to Celsius, why not get some interest on it? I'm a big believer in that, putting your money to work, just like you would want to put your money to work in a savings account. And in the case of Digifox, we give out, in this case through Celsius, 10% interest on savings. The rate can vary over time, but it's been remaining at like 10% for the last couple of months. And in many cases, it's just been climbing up and up as there's been a lot of demand on the borrowing side for those stable coins. Third, the earlier the better. Again, that January 15th deadline will be really, really helpful to boosting those chances for any money you're depositing. Fourth is to like and retweet that official announcement post. Our Twitter page is at Digifox_finance. I have no doubt. Hope we'll put the link there for the post there, so you guys can click that, or you can just check it out on our page. And last but not least, getting started with achievements. So again, great way to get started with the app and a great way to boost those entries. Basically, in this case, free charge. There's not any cost to really participating in achievements. All right, guys, that's it in the sense of my kind of planned rambling today, but I'm happy to answer some questions for you all. I really appreciate you all listening to me talk. Hope as well. I'm really excited to hear what people have got to say and just kind of go back and forth, maybe kind of answering some of those questions.
Awesome. Yeah, thank you so much. That was a really awesome presentation, and I learned a lot. I'm sure everybody else did as well. If you guys are listening on YouTube, it's going to be so much easier if you jump on the Zoom and put your questions in the Q&A box. It's easier for us to keep track of everything. I can try to remember what you guys put in the chat, but it might get lost. So without further ado, we'll kind of just dive into the Q&A on Zoom here. Nick says, network fees are insane. And yes, they are. 2 questions. Anything going on in the Ethereum world that's aiming to reduce them long term? And 2, until then, is there any way that we could have a live running ticker that shows like what the network fees are?
That's actually a really good point, Nick. To build on that, we've been basically one of our top priorities. We actually talked in our product meeting this quarter was to focus on trying to reduce network fees. And it's a really unfortunate reality. Just to clarify for those who may not know, when you're making a swap or maybe making a transaction of some sort, you're going to likely incur some kind of network fee. And this is not meant to generate revenue for Digifox. It's meant to cover the actual cost of doing everything you do in Digifox on the Ethereum blockchain. Every transaction is deployed on chain. And because of this, there's a cost to it, especially making swaps. It takes a lot of data. So anyways, to remove the complexity here, there are a lot of great solutions out there. There's, for example, a lot of layer 2 scaling solutions, which are basically things that obfuscate a lot of activity on the core Ethereum network and put them on a layer 2 solution. So imagine this is the Ethereum network, and layer 2 is where you're doing all your trades and activities. And then the final state of all those trades and transactions get recorded in a much lighter weight transaction to the Ethereum blockchain, which saves a ton on fees. It basically will allow us to remove network fees entirely. We can't do this until our partners do it, like Uniswap and Celsius and Compound. We need them to move and migrate to those layer 2 solutions. Luckily, many of them are already exploring it. We're working our best to hopefully provide those solutions as soon as they are available. In the meantime, you brought up a great point there. There's a lot of things we're going to probably be doing on our user experience to let people know when network fees are high or low. And second off, you can basically come back and check throughout the day in this case. And we're thinking about even setting up where you can get notifications when gas fees are low. So you can go out and make those favorite trades that you want to make. So instead of paying the ridiculous $30, $40 that sometimes network fees can be to swap during peak hours, you can trade something like $5 to $7 for a trade, which, if you're trading, in this case, a couple $100, is really not that bad overall, especially with crypto where things can go up 5, 10, 20, 100% in a single day sometimes.
Mm-hmm. Yeah, and the kind of question I've gotten along with that is like what is usually the best time, like when are network fees usually low? And I'm assuming it would depend on your like geographic location.
Yes, exactly. There's varying time zones. I would just say the best thing is I think there's some articles online that can help answer that question. I'll be honest, I actually can't think of them off the top of my head. But I will say overall that yes, there are specific time zones that are much better. And outside of that as well, you can get in that routine where you just kind of come back and check throughout the day, just come back to Digifox and say like, okay, where's the fee at? Eventually we'll work on setting up a notification system where you can get notified when basically the gas price or GWE is low enough. So I'm working with the product team to hopefully see if we can get that in there.
Be awesome. Diane says, and then sorry if I ever mispronounce anyone's name, I'm really sorry. Says, I'm new to investing and fully interested in Bitcoin, but don't know how much to invest and how to gain profits on a good investment. A lot of that was probably answered during the presentation, but.
Yeah, again, I guess being able to know when to take profit really determines on your time frame and your expectations for the market. Yeah, that's something that's very difficult to answer, to be fair. And I think maybe using the example I mentioned earlier might be a really good starting place to, again, have longer term time frames than what many people will try to get you to do, which is try to day trade or focus on the short term. It's genuinely not the best strategy.
Yeah. Raj says, hi, Bitcoin deposit on Celsius using Digifox is 4% plus, whereas if I deposit in Celsius directly, it's 6% plus. Am I missing anything? And I do know that Celsius does do, they have two different types of interest rates if you check their website, and they do like to advertise the higher percentage on their main page. But if you scroll down to where they actually show you the tokens, they have an option where you can, if you go directly through their platform, earn sell tokens, and then another option where you can earn in-kind tokens. And we do the in-kind option. So Celsius doesn't allow us to integrate that feature that they have where you could earn sell tokens. But if you're using that feature, then you would be earning sell tokens, not Bitcoin. If you do it through Digifox or you do it through Celsius and you do the in-kind rewards, you'll earn 4.5 or 4.4% on your Bitcoin right now. I think that's the current rate, but I would have
exactly. Yeah, hope you put it perfect in that case. In regards to the difference there in the rate you're seeing, again, like a lot of platforms like Celsius, they're going to try to promote that and stuff because it's the higher yield. But the thing is, you're not earning interest. Let's say, for example, you deposit USDC or Bitcoin, right? Usually within Digifox and in Celsius, you have the ability to earn interest in that native currency. So I deposit USDC, I get USDC interest. If I deposit Bitcoin, I get Bitcoin interest. That 6% you're seeing versus the 4.5% is earning sell tokens, which is the native token of the platform. You can buy them in Digifox, but we just allow you to earn the in-kind interest, which the vast majority of users are usually earning in-kind interest in this case rather than sell interest.
Anonymous attendee says, and this is a really, really good question. It kind of goes along with a few questions that Kyle has asked right after. But I know being kind of hard here, but just wanted to ask a question. How far can I trust Digifox and its team as we're not FDIC insured? Kyle wants to know like how long we've been around. Is it safe to hold coins in Digifox, or do you need a hardware wallet, etc.?
Yeah, I mean, that's a lot of great questions overall. So I'll go ahead and dive into the first one. So for those who may not know, FDIC, the acronym stands for Federal Deposit Insurance Company. And basically the FDIC is a protection program that a lot of commercial banks have for savings accounts in this case. So like your savings are protected up to a certain amount, right? In the crypto space right now, there just genuinely isn't a well-made establishment that's similar to FDIC or where the FDIC has really stepped into the crypto industry to protect digital assets just yet. It's just such a new industry. The FDIC is a massive organization. And because of that, there's not any major insurance policy like FDIC just yet. Needless to say, though, we integrate with Celsius and Compound, two of the largest players when it comes to basically earning interest on your cryptocurrencies. And they're the biggest ones for a reason. They pay competitive interest rates. And above all, not only do they have a lot of experience behind the company, Celsius is founded by Alex Majinsky, who founded Voice over Internet Protocol, the technology we're using right now to stream to you all, which is pretty exciting. But outside of that, they have a industry leading team in this case that uses industry grade security, not only for your crypto, but also for your data and your privacy. And the important thing about Digifox overall, as a company ourselves, what, we have direct control over outside of making sure we know who we're working with and what their standards are. Digifox itself, we launched as a company in June of 2020. We had been around since as far back as July of 2019 behind the scenes building out the application. It's founded by myself and Nicholas Merton. I founded one of the largest YouTube channels for cryptocurrencies. And over the last few years, I've gotten to see how a lot of projects do things great and how a lot of projects do things wrong. So we take things like, for example, as I mentioned earlier, when we were talking about investment portfolio management, security is a key priority. We do not want access to users' funds. And that's why we're a self-custodial wallet. So similar to a hardware wallet or software wallet, you own your own funds. You are your own bank. There is no case where DigiFox has access to your funds. And that's a very beautiful thing. We think that you being your own bank, if you really care about owning your own assets and not having to trust anyone, if you're very focused on security like we are, DigiFox can be a great home for your assets. If you find that in this case, a hardware wallet will be a better security option, and people have varying opinions on this, it really depends on who you ask. But in a lot of cases, some people will say that a hardware wallet is maybe the better option. You might choose that a hardware wallet's better, but the problem is that you're not going to be able to earn interest on your assets and as easy of a way as you would with DigiFox interacting with compounds. You won't have a lot of the conveniences of a software wallet while still having very high institutional grade security when you're using DigiFox. It's basically our system is based off of open sourced reviewed code in this case. So every smart contract wallet is unique to you. It's a unique wallet. So imagine like having a wallet in your pocket that is yours that can only be accessed through your phone and email. That's the way I generally like to present DigiFox and the selling proposition of it overall. And what was the third point, Hope, in this case? So is there a third question they mentioned? I'm sorry, I might have blanked.
No worries. It's really good. You also wanted to know if it's safe to hold coins on DigiFox, or do you need a hardware wallet? And I think you mentioned this earlier, like if you're really paranoid and it's something that's like, you just want to be super, super, super careful and trust yourself to hold the seed phrase, like the hardware wallet is going to be probably the most secure. But smart contract wallets are also pretty secure.
Yeah. As well. Absolutely. Yeah. We're going to be continuously building on the security of DigiFox, whereas hardware wallets have kind of reach their maximum point of security. The one thing about hardware wallets that can be pretty detrimental is just like any other traditional crypto wallet that has recovery phrases, your 12 to 24 words. If you lose those 12 to 24 words, like, for example, you misplace it, someone gets access to this 12 or 24 words, that's access to your funds. Or your funds are lost forever if you lose those 12 to 24 words. You're much less likely to lose your phone or lose access to your email. These are things that you can get a new phone, in this case, from your cellular provider. You can always recover your email with a secondary email, right? There's a lot of things like that. But again, understanding, in this case, establishing proper security through DigiFox is definitely key. So we recommend using PIN codes and face or touch ID. Makes the access to your app a lot more secure. So it's only you getting access to your funds.
Yeah, a couple of people have also asked in the YouTube chat, like what specific tokens are available. So pretty much any ERC20 token and Bitcoin at the moment.
Yeah, and the important thing to keep in mind is if people are curious as well about like what coins can you swap into in DigiFox, we have around, I think we actually just added a couple more. So I think we have around 55 to 60 tokens now within the app. We just launched, I think the ones we just added were the Graph, Sushi token, and then there's two more. I'm blanking on. We just put it.
Was Aave one of them, or we already have?
We did add Aave. Yes, Aave was one we added back in December with the new launch of the app. And there's basically over 55 tokens. So major DeFi tokens, major established cryptocurrencies like Ethereum and Chainlink, and also Bitcoin. If you're looking to buy them, you can do them in DigiFox and stuff. So again, we try to keep competitive if in the sense of the fees, excluding the network fee here. In this case, DigiFox only charges a 0.49% fee for swaps. So basically less than half a percentage. To put that simple, that's basically less than 1/3 of what you're going to pay at Coinbase. So again, just a great way for a lot of people to get started. We want to make it a low cost barrier to entry for people to get in. So as many people can get access to the cryptocurrency space in a simple way.
Kyle also asks, why does DigiFox have a one-time charge to generate a wallet when no other exchanges do? What is the value proposition? And I believe he is referring to DigiFox Pro.
Yeah, absolutely. So this is something I actually wrote an article about. Maybe at Hope, if you want, we could link it in the Zoom and also in the YouTube chat. So this is one thing that we get asked a lot, guys. And it kind of like, it might seem like it goes against our thesis as an application. We're all about building finance for everyone and making it simple for everyone to get access to it. There's one thing that's important to keep in mind is that there's a cost to everything that we do here at DigiFox. And one of those is deploying a smart contract wallet. So that ability to not have to have a seed phrase that could be the life or death of your funds if you lose them, is utilizing a smart contract wallet, which accesses your, basically uses your phone and email. These smart contract wallets are a autonomous agent that holds your funds on the Ethereum blockchain. And we have to deploy that. There's a cost to it. There's a data structure that we have to implement onto the blockchain in order to generate that wallet, that unique address that's only owned by you. It's not like a typical wallet that doesn't have any cost to it. And because of this, with how high gas costs or basically network fees are right now on Ethereum, that can cost us anywhere from $30 to $50. In the summer of this past year in 2020, it was costing us $70. And as you'll read in the article, I basically, for the past couple of months, had paid out of pocket the cost myself as a CEO in order to allow people to generate these wallets. And we just couldn't keep doing it. So we basically wanted to meet right in the middle. We offer two different things. We offer the ability to do DigiFox Pro, where you can do an instant generation for $50. You can do a 24-hour generation for $25 for those who are trying to save money, or you can get on the wait list to have a free generation when the cost is absorbently lower than where it is right now. And the other thing as well is you can just use DigiFox Standard or DigiFox Classic in this case. And basically, this is integrating through our partner Celsius to earn the rates of interest, be able to buy through our fiat on-ramp partners such as MoonPay and Transact and Jim, and basically allow you to deposit from your bank and your debit card, be able to earn interest on the different digital assets that you purchase. But if you want to access the swap functionality, if you want to interact with the compound protocol to earn interest, which is a more decentralized way of earning crypto interest, then in that case, you're going to need the DigiFox Pro wallet. Again, we're not looking to make revenue from it. The major goal here is to cover that expense of generating your wallet on the Ethereum blockchain. It really can get that expensive sometimes. You can look at it actually on chain. It's not an easy or cost-effective process. And we're hoping, this is why we're focused more than anyone on removing network fees, making scalability achievable for trades. We want to get rid of network fees, right? Our revenue comes from the standard DigiFox fees, the 1% deposit fee on platforms like Celsius, which will eventually turn into a 1% withdrawal fee in the future. And second off as well, the trading fee in this case, the 0.49% that we charge for swaps. We're big about transparency. We're big about making it open and accessible to everyone. It's our general thesis here is kind of, making finance for everyone and making that barrier for everyday people a lot smaller than where it is right now. It's the reason over the last decade we're at less than 1% global adoption for cryptocurrencies.
Awesome. Bruce says, I had a really quick question about the presentation. Why is the exit strategy to begin closing positions by 10 to 20% each week when Bitcoin is greater than $100,000? Not entirely understood.
Yeah, exactly. So basically, it was just an example portfolio, but I'll explain what that basically reads out in the sense of like how you'd actually go about executing that strategy. So if we're estimating in our example portfolio that I built, it's not a guarantee that this is going to happen. A lot of people project that around $100,000, the Bitcoin market is going to start to kind of pull back, that cryptocurrencies as a whole will start to pull back. So the problem is if you're holding crypto assets and you don't sell around the top, you might lose some of your gains, right? You lose some of that profit you made. So the general thesis here is that, look, it might top out at $100,000. It might continue to run. It might start to sell off towards 80 or 90,000. No matter what happens here, this is the range where price is not going to be around this valuation range for long. Things are overextended. We've probably made great returns. It's time to start preparing to lock some kind of profits in. So we're starting to take 10% of our money off the table. We sell 10% of our profit, or not just our profits, but our position. Maybe if the market is really starting to sell off or it's getting a bit volatile, we take 20% off the table. Next week, we take another 10 or 20% off, and we slowly edge our way out of the market where we actually get to materialize in our cash returns. Now, if you're not about like per se trading and you just want to hold long-term, that's completely fine as well. This is just a strategy. If you're someone who still wants to kind of time the cycles that Bitcoin tends to go through and possibly lock in more profits than letting it go down 70, 80% like we've seen in previous cycles, then in that case, it might be something to consider. But there's a lot of videos. If you watch the Data Dash channel or a few other different types of cryptocurrency YouTube channels and on YouTube, then you'll be able to kind of get that perspective as to why people might do that.
Mm-hmm. Kyle says, I have a Celsius account. Does that mean I qualify for the challenge? And kind of yes and no, depending on where your Celsius account is located. Um, we have a lot of people who join Digifox who already have a Celsius account outside of Digifox. Unfortunately, to enter the challenge, you're going to have to apply for a Celsius account within Digifox, and then set one up that way. And it's no problem to have two accounts. We haven't run into any issues with Celsius on that. But for the challenge specifically, it needs to be a Celsius account within Digifox.
Yeah, exactly. Being partnered with Celsius, we work with them directly, and then basically in this case, you're allowed to have a secondary account through Digifox. As we mentioned, we pay the same rates of like kind of interest. You're able to deposit a wide range of different altcoins and Bitcoin and stable coins, so you can really get good exposure to a variety of different assets, similar to how you would in Celsius. And the great thing is that it just kind of adds on top of Celsius. So you're getting the same kind of features you would get through Celsius. Plus, you have this great opportunity if you deposit during a certain time, whenever these challenges, to possibly win big overall on your deposits. So again, there's no guarantee of it, but at the same time, a good chance to possibly win on possibly having one of your entries selected and winning a part of the prize pool.
Mm-hmm.
But yeah, overall, hope. I mean, I think we've answered a good amount of questions here. And along with that as well, I just want to share with you guys if there's anything that wasn't able to be answered here today, or if you have any kind of additional questions or maybe technical issues that you're running into, feel free to ping us in our customer support within the application. It's been such a productive and great conversation overall. We got to talk about a lot of really interesting things today, but also get to hear from you guys as well about some additional things that might be on your mind and stuff, keeping in mind security along with that as well, navigating through the Digifox app and learning the basics of the actual overall application and how we can hopefully simplify your financial future. But above all, I want to say thank you all for joining us, and thanks as well to Hope as well for making the time. It's always a pleasure, Hope.
Always a pleasure to have you on as well. You guys could get in touch with us in the app, in the profile section where it says contact support. Again, keep in mind that our reply times are a little bit slower than usual as we're just coming off the holidays and have a lot of backlog. Or you can talk to us on digifox.finance. There's a chat box on the bottom right there as well. But yeah, thank you so much for being here, Nick, and we will see you guys all